So tonight, let's talk about psychology and trader mindset. So these are two things that any successful trader has mastered. So let's kind of look at the psychology of the market cycle. So here, let's start up here. All right, so we see the stock was kind of down in the dumps. There was disbelief. They think this rally isn't real. And then it starts to recover a little more, starts to bounce, and they think, hey, maybe a recovery is possible. And then they're hopeful, and then they get optimism. They say, this rally is real. I have to buy in. And then it proves itself. Say, it's time to get fully invested. I need to get in this stock. So they have the belief after optimism, and now they're thrilled. They're making a ton of money. They're telling everybody they know. They're telling the barber. They're telling the mailman, hey, man, you got to buy into this stock. You know what? You should even borrow money. Go take out a loan. Buy some on margin. They're in a state of thrill seeking. And then they enter a state of euphoria. They've made a ton of money. I'm an investing genius. How many of us saw that in the Trump COVID run, where you just put money in any stock and it just went up? And people thought they were geniuses. We're all going to be rich, right? Well, what happens when the stock starts to dip a little bit? I start to think, okay, we're just cooling off. No big deal. No need to worry. It's just going to cool off and then it'll go right back up. But it doesn't. So traders start to get a little bit of anxiety, maybe even a margin call. This dip is taking longer than I expected. And then denial. These are good companies. I've done the research. I know the fundamentals. They'll come back eventually, right? Panic. Oh shit. Everyone is selling. I need to get out. I need to get out now. I'm going to sell for a massive loss. And then there's capitulation. I'm getting 100% out of the markets. I can't afford to lose anymore. So, how many people after the 2008 crash said, I'm never investing in the stock market again? Never as long as I live. A lot of people. And then comes anger. Who shorted the market? Why did the government allow this to happen? we're kind of similar situation right now. And then comes depression. I lost all my money. My retirement money is gone. My college loan is gone. How can we pay for all these bills? I'm an idiot. And then it starts to bounce and say, this is a sucker's rally. I'm not buying it. I'm not falling for it. So as we can see, this price chart is human emotion manifested as candlesticks. Humans make decisions based on fear and greed. And that's what we're going to get into tonight. So, being a good trader isn't necessarily about being good at math, being good with numbers. This is a quote I love from Mark Douglas. He wrote an incredible book. It's called Trading in the Zone. It goes into trader psychology and mindset. I recommend it 100%. It's a book you'll return to many times. He says, I haven't seen much correlation between good trading and intelligence. Some outstanding traders are quite intelligent, but a few aren't. Many outstanding intelligent people are horrible traders. Average intelligence is enough. Beyond that, emotional makeup is more important. So, what's he saying? He's saying emotional makeup is more important than being intelligent. You don't have to be a smart person to be a good trader. You don't have to be a smart person to be a good trader. How many doctors, lawyers, surgeons, engineers came into the market and got destroyed? The big brains didn't help them then, did they? It's more about controlling your emotions and having a good mindset than it is about math and numbers and stuff like that. So, What are some of the good traits of an excellent trader? So these are the traits that separate the top traders from the rest. So the first one is honesty. Can you be honest about your trading? Will you be in denial about what needs improvement? Adaptability. What worked yesterday might not work today. Be flexible in your approach. Acceptance. We can't avoid losses, but accept when a trade went sour and take the loss before it spirals out of control. You have to accept that you're not perfect. No one is. Consistency. They follow their trading plan daily. They're not a boom and bust trader, but they are able to yield steady profits over time. Now, a trader who made $100,000 in a week and then gave it back in the next 2 days, that's not consistent. That's a gambling mentality. They treat the market like a casino. We want to treat the market like a business. Okay, and awareness. Great traders are constantly evaluating themselves. They know themselves well enough to know when to keep pushing or when to ease off. And introspection. So they have the ability to look within their self to identify why they made the decisions they did. So trading is a journey of self-discovery. So here we've got our monk. So traders need to have monk-like focus and discipline to be successful, never letting emotions get the best of them or sway their decisions. It is important to only place a trade when you are level-headed and calm. You need laser focus, guys. If you trade out of emotion, things spiral out of control. So to be a good trader and to use these emotions to your advantage, you have to know thyself. So this is a quote from Socrates. To know thyself is the beginning of wisdom. So let's talk about knowing thyself. So how does your personality manifest itself through your trading activity? Understand your strengths. What are you good at? What makes you a good trader? When you make good trades, what personality trait allowed that to happen? And know your weaknesses. When you placed a bad trade, was it market related or was it emotionally related? Was it coming from something that you couldn't control or was it a mistake based on your personality? So be honest about your weaknesses so that you can keep striving to improve. So we have to trade to our strengths. So what's your current situation like? So what's your personal life like? Are you in a mental state where you can give the market your undivided attention? Are you thinking about that project at work? Or you just had an argument with your spouse? Are those the best times to trade with thousands of dollars on the line? Probably not. How about your lifestyle? What kind of trading style allows you to be a successful trader with the kind of lifestyle you live? Right? So you're not going to be a scalper, if you have a very busy work life. You work a 9 to 5 during market hours. That's just not going to work, right? And you can't make that work. And your personality. So, what if you're an impatient person? Then maybe long-term investing isn't for you. Or maybe you're an impatient person in another sense. Like you're waiting for the trade to go your way. You want to make money in 15 seconds. And you get mad or angry at every single red candle you see. Maybe scalping is not for you. So we have to learn about ourselves to craft a strategy that works for us. What works for me works for me. What works for you is going to be different. And of course, your risk tolerance. So, I'm a young guy. I'm 27. I could blow my entire account and come right back. Wouldn't be a huge deal to me. But, if you're a little bit older, you're trading with, your salary or your retirement money, or, you need that money for your kids, or your wife, whatever. maybe you can't step on the gas so much. You have to be a little more conscientious of what you're risking. So, this quote I love by Albert Einstein: everyone is a genius, right? But if you judge a fish by its ability to climb a tree, it will live its whole life believing that it's stupid. So we have to find a strategy that fits us, not necessarily that fits others. What works for me works for me. What works for you works for you. So imagine a basketball player. He's 6'1", pretty agile on his feet, good passer, good shooter. We wouldn't put him in center, though. We wouldn't put him in forward, right? So how do we get to know ourselves and know what kind of personality traits help us or hinder us in the markets? So we have to journal our trades. And this is something I want you guys to do every single trade, every single day that you make a trade. And in this journal, I want you to put your entry and your exit. Where did you enter and why? Why did you take the trade? What was the setup and what other factors gave you confidence to take the trade? What were your emotions before, during, and after the trade? This is important to see if your results are emotionally based or technically based, or maybe a factor of both. And usually it is our emotions that get the better of us. And how could the trade have been better? Execution-wise or emotionally? How could you have managed the trade better? So here's an example of a journal I made the other day. I went short on the S&P 500 E-mini futures. Right when it had this failed falling wedge breakout right underneath support, I went short. And I saw this increasing bearish volume, so that added to my confidence to take the trade. And the reason for exit was this bullish engulfing candle here, and I was satisfied with my gains. So I entered at 40.70 and I exited at 40.57. I made 13 points with 5 contracts for a profit of $3,250. My emotional state was somewhat timid. We had been chopping all day. As you can see up in here, there really wasn't that much range in this chart. So I wasn't keen to drop so much size that I normally would. So I was a little bit timid of taking the trade, but I did end up pulling the trigger. And then while I was in the trade, it started working out. Bearish volume started increasing. So I was composed. And I thought, hey, I think this is going to work out. Let's hold and see what happens. And then after the trade, I felt satisfied. What I could have improved, I didn't anticipate such a large sell-off. So I could have scaled a little better and maybe held a runner. Because as you can see, I exited here, but then it went way down over here. So I could have made maybe 26 or 30 points. But that's okay. So I need to have more confidence in my plays. So it's a quote by Aristotle. We are what we repeatedly do. Excellence, then, is not an act, but a habit. Good trading is about making small, good decisions over time. It's about building good habits over time. And this is a quote from my piano teacher, Julie B. She's a world-renowned pianist. Some say practice makes perfect. I say practice makes permanent. So if you keep doing the same setup the same way, keep making the same mistakes, not journaling them, not being aware that you're making those mistakes, you're doing the same thing wrong thousands and thousands of times, you're just ingraining that into your brain. You're developing bad habits that are hard to fix. So what I like about the journal is it's a constant self-evaluation. Remember, when you trade, you're your own boss. So you have to give yourself your own reviews. And it's not easy, guys. I'm the first one to tell you, trading is not easy whatsoever. Trading is one of the hardest things you will ever do. Ever. So this is a tweet that I tweeted in November of 2021. So what other people see, I made $1,000 in 5 minutes or whatever. But the reality is, I studied for hundreds of hours. I had several unprofitable years. I blew up 4 or 5 accounts. Late nights, early mornings, crippling self-doubt, hundreds of hours of more studying, People telling me, get a real job. Trading is not a real profession. Dealing with these extreme emotions, fear, greed, anxiety, and staying disciplined. But it's no coincidence that the highest paying job in the world is one of the hardest. So, no man ever reached to excellence in any one art or profession without having passed through the slow and painful process of study and preparation. Another quote by Mark Douglas. So, we have two things to consider: our plan of action and our execution. We leave emotions out of it. So, before you even take the trade, you want to know, what is your entry? What criteria needs to be met for you to enter the trade? Exit. Where will you exit the trade? What criteria must be met to take your profits? Or stop out. Where will you stop out of a trade? What criteria needs to be met then? And I want you guys to think of the opposing side. If you're a bull, what would a bear do? If you're a bear, what would a bull do? Know that enemy. Okay, you have a plan, right? A plan is going to help your confidence exponentially, but everyone has a plan until they get punched in the mouth. Mike Tyson. So you have a plan, you enter the trade, you go long, you see a massive red candle. You're down huge. Maybe you didn't put a stop loss in. The trade goes against you immediately. What are you going to do? Are you going to freeze like a deer in the headlights? How will you react when that plan doesn't go your way? Can you follow your plan? Can you remain disciplined? Can you immediately say, this didn't go my way. Let's stop out before I lose a ton more money? I think maybe my losses could spiral out of control, and I don't want that. And it's not something that happens in a day. You have to have gained some experience and get some skin in the game to follow through on this. So let's talk about some of the key emotions at play when it comes to trading. So fear is our first one. Are you afraid to take a trade? Do you take profits too soon, aka paper hand? The fear of failure will stop you from achieving success. So how do we deal with fear? So fear is the driving factor in many trading decisions. If you are fearful, please consider sizing down. If your heart is racing, you can feel your heart physically beating, maybe you're in too heavy. Maybe you're putting too much risk on. You have too much size. So take it down a notch. You don't need to have these massive positions to make money. Take a deep breath. Don't do anything rash. Take a deep breath. Just relax. Ask yourself if your strategy fits your personality. Do you believe in your knowledge and abilities? So you have to believe in yourself and learn from mistakes. And that comes with time. When you journal and you get a couple years of screen time. So as you get some screen time, the fear goes away and you become more confident in your abilities. 2, attachment. Are you attached to your capital or any one trading idea? So we fear losing what we are attached to. We learn to detach from the market, and that's not what humans are wired to do. So when you place a trade, your fight or flight response is activated. So humans will naturally be inclined to protect what is theirs. So we have to think the opposite. We have to train our brains. We have to rewire who we are as a human to detach ourselves from our trading capital. So we have to realize, the result of a trade does not diminish our self-worth or potential as a trader. We have to stay laser focused in the present. So your past results do not define your future. And this is another component of the fear we were talking about. So this is a quote. I'm sure you guys have heard it. Nobody ever went broke taking a profit. You know who said that? A guy who went broke taking a profit. And what do I mean by this? You say, oh, of course, you can't go broke. He made money. Okay, what if he took the little baby profits? And his little baby profits are smaller than his massive losses. Remember we were talking about our risk strategy? Our 1 to 2 ratio, you need to be right at least 34% of the time. Well, that's all contingent upon you taking trades that meet their targets. So if you just take small profits because you're afraid of losing what you have, you're attached to your capital, you're attached emotionally to this trade, you may as well blow up. So it is a very hard thing when you're in a trade, and you're long and you see these red candles, but they either hit the stop or the target or break even. So you have a couple different options. You can either take a big win, a big loss, or a small win or a small loss. And if you eliminate big losses, you're well on your way to trading successfully, but you also need to take big profits. At least profits that meet your risk strategy, right? So this is kind of intense, guys. Do something that scares you. You have to be fearless. You'll never be a successful trader if you cannot conquer your fear. And the Socrates method is really not for the faint of heart. Go for that promotion. Swim the sharks. Go skydiving. Ask someone way out of your league out. Go dive off a cliff. Travel to a far destination by yourself. So become comfortable with being uncomfortable. Comfort is where dreams go to die. And I think it was Henry Cavill who said, if you give a man good food, all his ambitions will go out the window. There's more to it. I forget it, but it's something along those lines. Comfort is where dreams go to die. And as a trader, we're always looking to push ourselves. We're always looking for that next level up. We don't ever want to be complacent. If you're not challenging yourself, there's no growth. So let's talk about the ego. So stubbornness and refusal to take a loss will sink your account faster than quicksand. So we have to remember, you don't need to know what's going to happen next to make money. Anything can happen. Every moment is unique, meaning every edge and outcome is a truly unique experience. The trade either works or it doesn't. We don't have a crystal ball, guys. We don't know where the market's going to go. People message me, where's SPX going to go? I have no idea. Do I have a crystal ball? No. I don't care. I'll trade what I see. So dealing with our egos. So ego has blown up many an account. You need to confront yourself and be honest about your ego. So most traders, they actually don't fear losing money. They fear being wrong. It hurts their little egos. So do you move your stop loss out of fear of being wrong? Say, maybe I'll move it up just a little bit. I don't want to be wrong. I don't want to take the loss. I want to be right all the time. Does being wrong hurt your ego? Does it hurt you inside? Does it hurt your feelings? So know that any good system accounts for losses. Good setups fail, and they fail often. And we have to accept that we're human and make mistakes. Not even Kobe Bryant shot 100% from the three. So not a soul on this planet is right 100% of the time. We can't act like that. So the best winners are the best losers. To be a good winner, you have to be a good loser. Remember in sports when we were kids and you'd play basketball or little league or soccer, and you have to shake the other team's hand, and if you lost, it kind of stung. I have to shake these guys' hands, but that's good sportsmanship. We have to go back to that. We have to be good losers. But how do we deal with losses? So they're a part of any trading plan, and we know that, okay? But they hurt our ego. So when we take a loss and maybe we're not in the best emotional state, this loss maybe it pisses us off a little bit. So we're going to try take a deep breath. Stay calm. We have to remember losses are part of the strategy. It's hard to do that in the moment, but go do something unrelated to trading. Go for a walk, clean your car, clean your room or something like that. And then when you come back, level-headed, journal how you could have executed better. And then if it's real bad, if you can feel yourself just getting angry, getting mad at the market, how could the government do this? Walk away. Turn the computer off if you feel emotional. Stay off Twitter, stay off social media, just be done trading for the day. And then you can come back when you're in a more level head. Trust me, guys, you do not want to trade when you're emotional. You don't want to trade when you're angry, when you're pissed off, when you're depressed. It will show through your trading. I promise you that. So, most importantly, don't let losses affect your self-worth. The best traders are the best losers, and just don't come back until you're ready emotionally. So, when we trade and we lose, doesn't mean we're a terrible person. It just means we're human and we make mistakes. And all we can do is strive to be better than we were the day before. But when you are thinking about losses, I want you to think about this. So remember we talked about bag holding? When you are down on a stock, but your ego refuses to let you take the loss? Well, think about this. If you're down 10%, the stock needs to go up 11% for you to break even. If you're down 50%, the stock needs to go up 100% for you to even just break even. That's not even profit. For you to end up right where you started. So the stock has to double for that to happen. If you're down 80%, the stock has to go 400%. It has to 5x from where it's at. 90%. You let an options contract or something go down 90%, it has to go 900% from here. So think, is that realistic? If you bought GameStop or AMC at the top, you bought Dogecoin at the top, you're bag holding pretty hard. Do you think it's going to go 400% or 900%? You think you're ever going to break even? Maybe. I don't have a crystal ball. Maybe you do. But am I going to wait for an unrealistic break-even gain to happen? No, that's opportunity cost. So think about that when you're thinking about losses, when you're thinking about ego. Yeah, it sucks to take a trade, but you know what sucks even worse? To wait for a 900% break-even. To not even make profit. To just end up where you started. So we can't control the market, but you can control your reaction. The market doesn't care what degrees you are, how smart you are, what your status is. It doesn't care. It doesn't know. It's not a living thing. So you cannot control the market, but you can control your reaction. And I think this is why a lot of unlikely success stories happen in the market. You hear about doctors and lawyers that get smoked in the market, absolutely annihilated. But then you hear about the high school dropout, made $1 million trading Forex or something like that. Let's talk about FOMO. What is FOMO? So it means the fear of missing out. So how do we deal with FOMO? So it can be tough to watch a stock go parabolic while you're stuck just watching on the sidelines. We all want a piece of the action, right? I'm sure you guys remember people, posting a status or whatever about AMC. It's up hundreds of percent. GameStop. It's up hundreds or thousands of percent. And you thought, man, I need to buy in. I need to get in on this. And what happened? As soon as you buy in, it tanks. So to deal with this, or maybe you see a breakout and you see a massive candle, a couple massive candles, and you think, well, it looks like it's breaking out, so I think I'll just get in here. You don't even care about your entry. Not a good idea. So there's endless opportunities in the market. At least wait for a pattern to appear. If you got FOMO and you say, hey, I want to get in on this, wait for, a bull flag or some kind of technical patterns, some kind of pennant or consolidation first. You don't want to just slap the ask. No. So everyone is missing out. When your mailman and the barber is talking about it, you missed it. You missed the move. When the grocery store clerk, they're talking about GameStop, is over. You might as well look for something else. So how do you deal with that? Just log out of social media. Take the ticker off your watch list. Just stop looking. You got to think, who cares? There are endless opportunities in the market. There are how many stocks? Like 9,000? How many Forex pairs? How many cryptocurrencies? How many futures contracts? There's always something to trade. There's endless opportunities every single day. So when you succumb to FOMO, it usually results in a poor trade. You usually get burned, right? With unfavorable risk to reward. And it's okay to miss a play. There will be plenty more. Thousands and thousands of more plays. How about greed? How do we deal with greed? So we all want the most out of a trade, right? We all want to hit 10 baggers and make hundreds of $1,000s in the market, right? But at what point are we being greedy? At what point are we not being considerate of our capital? Consider this. What's easier to replicate? Going for home runs or compounding base hits? You want to make 500% on every trade or make 10% or 20% on each trade? What's easier to replicate? So you can have a trailing stop in place. Remember we talked about a trailing stop. It trails price so that when price goes to a certain level, it stops you out in profit. And it kind of takes the guesswork out for you. So take profits on the way up so that the trade can't go against you. And follow your exit strategy. You think, well, it met my target. There's resistance here, but what if it breaks out above resistance? That's fine and all, but take some off the table. I had this guy in one of the groups I'm in. I'm not gonna say his name, but he was up 1,000% on like Netflix calls or something like that. I said, bro, make sure you lock in some of those profits. He said, no, bro, it's going to 2,000%. Are you kidding me, bro? You're up 1,000%, and you're not gonna take any of that on a Lotto Friday, where the option could easily go back to where it started. Easily. You're not going to take any of that? That's greed. There's no other way to put it. That's greed. It's okay to let stocks run, keep a runner, let them hit their target, or follow your exit strategy, but you do need to lock in profits. How would you feel if you 10x'd your money on a trade, but then you got greedy and then it came back down your entry? You actually made nothing. So you turned 1,000 into 10,000, and now you have no profit at all. So greed is the number one reason traders let green trades and massive profits turn against them. So this not only depletes your trading capital, but it depletes your mental capital as well. It's extremely frustrating. I've been there. I've had green trades go red on me. I'm not perfect. Imagine how the AMC people felt. People especially who had options. They're up 20, 30,000%. Just insane, life-changing money. But they got greedy. Maybe they didn't know what they were doing. Some idiot told them, "Oh, synthetic shares, you guys got to hold. Don't sell. Don't sell." Okay? Then what happened? $20,000 or 20,000% gains into negative 50% gains. How would you feel? So don't let greed get the better of you. Lock in those profits. These people with greed, they don't understand the power of compounding. So here's an example of compounding. If we think back to Warren Buffett, that was his strategy, was kind of buy and hold companies with good fundamentals, and then he compounded until he was 60, and then that's when he had made his first $1 billion. Now look at him, he's one of the richest men in the world. So this example, they have a win rate of 55%. Kind of high, but it's okay. Position size, they're risking 2% of their account, and they're going for a 1 to 2 risk reward ratio with a $10,000 account. So at the first trade, within those risk parameters, they made 130 bucks. Okay, by the 10th trade, they've compounded that 2%, and now they're making 146. Okay, how about by the 100th trade? They're making, 450, 466, give or take, on each trade. Pretty nice, right? How about the 500th trade? $81,857. Now, how many people actually realize this? You see all those compounding charts. I don't know how many people actually get to this, self-actualization point of these huge compounding gains because they couldn't control their emotions. But the math is there. The math checks out. If you can compound gains, keep your risk small, and have your winners bigger than your losers, I don't see why this is out of the realm of possibility. So understand the power of compounding, compound interest. So let's talk about the 12 small account affirmations, and I'll send you guys a copy of this. So these are something that I made. They become really popular on the internet. So let's just go over some of them. These are rules that I read to myself each morning, and they help me out. They help me remember what it is that I'm aiming for and what it is that I should avoid. So let's just read them and talk about them. So number one, I will only play quality setups. I know the difference between good, pretty good, and excellent. I will strive for excellence. Remember, we are what we repeatedly do. Therefore, excellence is a habit. I will not take trades that do not meet my criteria. I will not take random trades. Oh, this looks good. No, I didn't plan for that trade, so I'm not going to take it. I will not chase it open. I will not FOMO. I know that there are endless opportunities to make money in the markets. I will buy what is appropriate for my account size. I'm not going to buy 10,000 shares of Tesla because I can't afford that. So I know that I need to control my risk to be a successful trader. I will not buy what I cannot afford. I know that if I'm wrong, the loss will be too severe. I'll cut my losses quickly when I'm wrong. I know that I will inevitably lose. I can't control that. I cannot control the markets, but I can control my risk and my trading decisions. I need to be objective in my trading. I'll go for base hits, not home runs. I have a strategy that allows me to make consistent profits with ease. I know that small gains compound over time. I'm not here to catch tops or bottoms, but here to make money. I will be a machine. I will not overtrade. If I'm satisfied with my gains or have made 3 losing trades in a row, I'll stop for the day. Turn my computer off. So I'll only trade where there's volume and liquidity. I want to be where the money is. I'll avoid chop, sit on my hands if need be. I do not need to trade every day. I will be protective of my capital. I will not FOMO into other traders' ideas or alerts with no preparation. I would rather take a win or loss based on my own preparation and execution and conviction than rely on someone else. I will only take an alert if I agree with their thesis. I will make the trade my own. I'm an independent trader. 9. I will not let a green trade go red. I will lock in gains. And I'm not talking about, oh, if you're up $5, don't let that go red. No, that's not what I mean. That's just being nitpicky. If you're in sizable, decent profit, don't let it go red. That's really not a hard concept to understand. Set your stops. Break even if need be. Or even lock in some. Take profits on the way up. 10. It is okay to be wrong. It really is, guys. I know that if I follow my system and I stick to my rules, I'll be successful in the long run. I know that, if I trade with the 1 to 2 ratio, I only need to hit 34 or 35 out of 100 trades to be profitable. Can I achieve that? I believe so. 11. I will do my best to control my emotions. The size of my account does not reflect who I am as a person. Remember, I can't always control my emotions, but I can control how I display those emotions. If that makes sense. And 12, I will never give up. I'm tenacious. No matter how many times I fall down, I will get back up. No matter how successful I become, there is always room for improvement. I can do anything and everything I set my mind to. Super cheesy, right? So let's talk about comparing to others. I know social media can be just a really dangerous place when people posting Lamborghinis, Rolexes. They're in Santorini in Greece on these luxurious vacations. But we can't compare that. We don't know how long they've been trading. We don't know if they're a scam RNS or not. Maybe they're legit. Who knows? But our journey is uniquely our own. So our journey, we want to learn how to fish and never go hungry a day in our life. So don't compare your first day to someone's 20th year. So I've been playing piano personally for 23 years. If you were better than me in the first week, I'd be amazed. And then that's not me being cocky. I just have a ton more experience. And I tell all my piano students that, yeah, I can sight read and play anything you want and all this stuff, but that didn't happen overnight. Not at all. 23 years of practice. So, social media and trading communities can be super dangerous, and you can develop bad habits following others. So, I challenge you to trade on your own at first. You can ask some more experienced traders their thoughts on the market, but only with the aim to learn, not to follow. Never chase someone else's success. Create your own path. So, never ask someone, hey, should I sell this? Or, hey, should I enter here? Or, what's your target on this? What you thinking? No, have your own plan. Even if you do take their idea or alert, once you hit that buy button, that trade is yours. That's all you. You are 100% responsible for your money. Take ownership of that. And another reason discords can be kind of dangerous, you don't know their risk tolerance, you don't know their actual strategy, you don't even know how good they are. Or maybe you get an overflow of information. What I noticed about discords is that most of it is people talking about plays that they're in that nobody cares about. It's basically people just talking to themselves, to be honest. Entered Roku calls here. That's cool. Sharing your journey. I respect that and all, but for a new trader, that's not going to help you. That's not going to help you at all. Go through the trenches at first. Experience all that you need to. Journal it. Go back to study. And, find maybe a couple people, maybe two or three more experienced traders you can bounce ideas off of. That's fine. But, you have to create your own strategy. You'll never be successful until you find what works for you. And then remember, we have to align our goals to our purpose. Remember in the first lecture, I had you write down what is your reason for trading? What are your goals? So think, does your current trading behavior align with your motivation for trading? Can you achieve your goals as you are now? Whether it's trading, whether it's professional, personal, or whatever. Can you achieve your goals as you are now? Seriously think about that. Invest to change lives, never for greed. This is my personal quote. I had it pinned on my Twitter for a very long time. I think when you come from a place of, genuine want to help people and, you want to provide for your family and you want to change people's lives, you just grind that much harder. So when you grind for greed, think, oh, I want this Rolex. Oh, I want this Lamborghini. I want all these girls. That's nowhere near as powerful as, hustling, putting in the work to change the lives of people around you. Maybe I'm different. Maybe that doesn't appeal to you. But for me, that's my motivation. What's your motivation? Maybe it is for the Lamborghini and the supermodels. That's fine. You have to find what it is that motivates you. Oh, here's a good one. I just posted this on my Twitter. If you don't like the hand that fate's dealt you with, fight for a new one. Me growing up, I was poor all my life. Now I do okay. So we have this trader's journey. It's kind of like the journey of a hero. We have that beginner's luck. The trader thinks it's as easy as pressing a few buttons. That's the worst thing that could have happened for you. Dogecoin, worst thing that could have happened to you. It's not that easy, bud. And then we have devastation. The trader's humbled. They consider quitting. But for some reason, maybe somebody talked them out of it. Maybe they're really motivated. They keep trading. So when you feel like you're about ready to quit, after you've given it months and months and months of practice, application, and really given it your all, that's when you're most likely to have a breakthrough. So don't ever quit. It's okay to take a break. Maybe we'll see you in a couple years. That's fine. And then eventually, they break even. After all those endless hours of studies, those long nights, those early mornings, and the practical application of their strategy and technique. And then eventually, a couple of years down the line, 2 or 3 years, they become profitable. They were able to look within themselves to achieve consistency. They found what worked for them, what personality traits bled through that allowed them to succeed, what weaknesses in their personality that they had to improve upon. And just some like general stuff here to help with your mindset. Your trading station. You all need a trading station. You don't need like all the fancy monitors. I just use a laptop and a screen, one extra monitor, and I do fine. But make sure it's clean and free of clutter. So you need a productive trading environment that is clean and organized, free of distractions. Your friends and your family, they know that when you're in your trading station, not to bother you. You are busy. You are working. Now, obviously, if you have kids, it's a little bit different, but for the most part, let them know, hey, I'm working and I need some peace here. And this has to be a place that you're comfortable with. If it's you got soda cans all over the place or trash everywhere, that's not really productive work environment. So keep your trading desk clean. This is your money making station. And health and wellness. Take care of your mind and body. So trading is a performance art. So every day when we wake up, we have to be at our best. We have to give it 100%. No, 1,000%. We need to be on our A game. So if you're really serious about trading, you need to eat a healthy diet, stay hydrated, exercise regularly, get a good night's sleep. Do you want to be the best trader that you can be? Do you want to be absolutely filthy rich from trading? You're going to need to improve your performance. If you trade drunk or high or you didn't get to sleep till 4 a.m. out drinking all night, is that really good conditions to be trading in? No. And your mental health, your mental capital is so important. Maybe the most important thing, your most powerful trading tool. So be sure to water your own garden. Take care of yourself. So trading is more mental than anything else. As a trader, our mental health is the most important thing in the world. So we have to keep a positive attitude. And surround yourself with supportive people who push you, not people who let you be complacent, people who let you keep eating unhealthy, or people who support your drinking addiction. I'm not trying to call anyone out, but you know what I'm trying to say. People who push you to be the best version of you that you can be. So maintain positive relationships. Don't become so obsessed with the market, that you blow off your friends and family, and get plenty of sunlight. That's super important. The other day, I had been, making one of these lectures and just stuck in the house for hours and hours, and then I came outside and it was like this bright ray of sunshine. It just shone upon my pale face, and it was great. You got to get that sunlight. Absolutely. Okay, so that's the course. But where do you go from here? So I want you to paper trade. This is phase one I'm looking at. And record your progress. So in the bootcamp chat, I want to still keep working with you guys. It's not over. I mean, the lectures are over, but your journey is only just beginning. So keep posting your watch lists and your journal entries, and I'm going to create a channel for your journal entries. And I want you to take them seriously. I'm going to hold you accountable. I'm not letting you get off the hook. And if you don't take it seriously, go somewhere else. Waste somebody else's time. So continue to review the material and study endlessly. I want you to be obsessed with the stock market. If you're not, maybe it's just not for you. Or maybe you're not at a place in your life where you can dedicate the time like that. That's fine. But eventually, when you do come back to the market, take it seriously. Give it your all. Give it 1,000% of your attention. I want you to study at least 1 hour a day. At the least. People who are really successful, they're studying 5 or 6 hours a day. Backtesting, charting, reading books, watching videos. So try to limit yourself to only 1 hour of TV a day. So Lamborghini, I saw that they actually don't make TV commercials. You know why? Because they said our target audience isn't watching TV. They're out there getting it, hustling, grinding, not watching TV. So you can take 1 day off a week. Obviously, this may sound extreme, but if you want to be successful, take it seriously. Okay, so you paper traded for a couple months. What now? I would say you could only move on when you paper traded successfully for 3 months. So if you lost 3 months in a row paper trading, you're not ready to open an account. 3 months successfully. So fund your account, or maybe consider one of those prop firm evaluations. Pay $90 to get a 100K account or something like that. And then when you start, risk small, risk no more than $10 on a trade, realistically. So that way you get to make small money, but your profits really aren't the goal here. The profit is to get some skin in a live market. And then eventually you do that for a couple weeks, and then maybe you size up gradually, you're building up. Don't size up too quickly. Don't start risking $1,000 on a trade after week 2. You're not ready for that. You're just not good enough. And then play defense, not offense. So the goal of trading in your first year, lose as little money as possible. And you're like, well, that sounds like it sucks. It does. There's no sugarcoating it. The first year is the hardest. Maybe even the second year is the hardest. Who knows? Depends on your journey, but these first couple years, they're hard. There's going to be a lot of emotions. You're going to get angry at yourself. You're going to get angry at the market. Maybe you'll get mad at the sky. It just happens. It's something that you have to deal with, and you have to push yourself through. If you can survive those first 2 years, you're well on your way. And that's not to scare you or anything. This is the best wealth opportunity maybe in history. Will you capitalize on it? Can you be successful? Do you have the tenacity? Do you have what it takes? So here's your assignment. I want you to write and type out your rules. They could be emotionally based, technically based. I don't care. They're your rules. So they apply to you. Print them and read them out loud each morning. Yes, out loud. Your family might think you sound dumb, but it's going to help you internalize them when you actually say them out loud. And when you print them, I want you not send a screenshot, but send me a picture of you having printed your rules. I want you to actually do this. And you can use my 12 small account affirmations if you want. That's fine. I think those are awesome rules that everyone should follow. A lot of people have printed them and showed me that they actually use them in their trading every day and read those rules to themselves every morning. So how will you hold yourself accountable? How will you keep discipline? I can't answer that for you. That's something you have to find out for yourself. And I want you to print your favorite inspirational quote. Tape it somewhere near your trading station. You don't have to send me a picture. I'll just trust that you do it. It'd be easier to print it when you print out your rules, so that way you only have to print it once. And think about, who are people you admire? How did they get to where they are right now? What lessons can be carried over to trading? So for like me, people I admire: Kobe Bryant, Michael Jordan, the never-ending pursuit of greatness. I strive for that every day. Maybe when I'm feeling self-doubt, I'll watch one of those interviews with Jordan or Kobe, and that will motivate me, and I'll get right back to it. And I want you to journal every trade. So you take a paper trade, you take a real trade, post it in the bootcamp journal, and I'm going to create that after every trading day. Include entry, exit, emotions before, during, and after. What could have been better? But give yourself some credit. Maybe say, what was good about that trade? I believe in the compliment sandwich. 2 good things and then 1 bad thing in the middle. And then don't forget, we still have the final. The final is next week. So I'm going to give you some time to study for it. And you can use the previous lectures. They're all recorded, they're all uploaded, and you can still use the PowerPoints if that's faster for you, and use those as resource material. Thank you guys.